Welcome to the Informed Minority, where we break down the markets using ICT concepts. Today, I'll be doing something a little bit different. I'm going to be going over a concept that I've named stacking. This helps me filter and look for high probability trades and where my setups will form. If you're ready to level up your trading game, you're in the right place. Let's dive in. The stacking concept. This is something that I've just found recently and what has helped me become a lot more consistent in the market and looking for the same thing over and over and over to occur. And we know that the market is run on an algorithm, so it's going to have specific patterns. And when you can realize and understand the patterns, you're able to find consistent results in the market. So what am I looking for? I focus on identifying key levels on the highest time frame I do my analysis off of. If I'm bullish, I'm looking for lower time frames to support levels in the upper portion of that range. If I'm bearish, I'm focusing on the lower portion. Here's the concept. It doesn't matter what PD array is on the daily. It also doesn't matter what PD array is on the 4-hour, but the entry pattern for me stays the same, which is a breaker. So it could be an order block fair value gap, an inverse fair value gap, breaker, and an inverse fair value gap is pretty much a fair value gap that gets ran through and then you expect it to act as support. Then it could be a breaker fair value gap, or it could be a breaker on a higher time frame, but the lower time frame for me, this one always stays the same. So I'm looking for the daily to have a higher time frame PD array. I'm looking for the 4-hour to have a higher time frame PD array, and then the 1-hour, I'm looking for my specific entry model. This is if you're looking on a daily to a 1-hour entry pattern. It's the same thing for the 4-hour down to the 15-minute. I want to see a 4-hour PD array, have a 1-hour PD array as well, or support level in the upper portion of this array, and then I go down to the 15-minute chart and look for my entry pattern, which is the breaker. Same thing on the 1-hour down to the 5-minute. I want to see the price be held in the upper portion and not go lower if I'm bullish. And then look for my 5-minute entry pattern, which for me is the breaker. So you notice how this always stays the same. These are staying the same for this sake, but this does not matter for me. This is how I do my trading. I personally look at the 15-minute chart. Sometimes I will look at the 1-hour chart, but most of the time I'm looking at the 15-minute chart, the 5-minute chart, and then the 1-minute chart is where I enter on. So again, it can be a 15-minute order block, and it could be a 5-minute breaker, and then I see another breaker. It could be a 15-minute inverse fair value gap with a 5-minute fair value gap, and then I'll see a breaker. That's how I'm breaking down and what I'm looking for every single day for this key signature to happen. When I see it happening in price and it's supportive of a direction that I'm looking for, to me, that's a high probability setup. And then I'm looking for my entry pattern on the lower time frame. So I'm going to give you some examples, and these are examples that I have taken. Also, the videos are here on this YouTube channel. As I go over the example, it's not going to be too in-depth because I have the videos on the channel, which I will plug in the corner of every example. Here's the first example. This was a 15-minute inverse fair value gap. See how we traded above it and came down. Notice how in the beginning we were supporting the upper portion of this inverse fair value gap. That's what I'm looking for in my trades. Then I go down to the 5-minute chart. I had this 15-minute inverse fair value gap, and then I had this 5-minute fair value gap. Notice how the 15-minute fair value gap forms in the upper portion of the 5-minute fair value gap. That gives me a framework to say, okay, potentially we can come up and hit these highs. Then we have the 1-minute chart. Notice how, again, the bodies we're respecting here, the 15-minute for inverse fair value gap, and that's also forming in the upper portion of this 5-minute fair value gap. So when I see these things again stacking in the upper portion when I'm bullish, that helps me gain a better understanding of where price is most likely to go next. Now, for those of you that have watched this video, and I did this specifically on purpose, that this one did not end up panning out. I just want to show you that this is not a end all be all. This is not a 100% win rate strategy. I'm just trying to show you that this is how I break down the markets each and every day and what I'm specifically looking for in price, which is the higher time frame, showing a lower time frame level, and then keep going down and seeing everything being supportive in the upper portion if I'm bullish and the lower portion if I'm bearish. This is the trade that I took. It ended up being a loss, and you know what? That happens in trading. It is what it is. So again, higher time frame down to the lower time. So we have this 1-hour inverse fair value gap. What would we expect on the 15-minute chart? We want to see this portion be held and show PD arrays as well in that upper portion that let us know that this is where we're more likely to trade to than lower. So we go to the 15-minute chart. What do we have here? We have this 15-minute fair value gap. Notice how the 15-minute fair value gap is over top of the hourly. Notice how we cannot leave the hourly inverse fair value gap. Notice where the bodies are staying. They're staying in the upper portion. Again, they're stacking in a certain area of price. So when I'm seeing that hourly and the 15-minute show me that it does not want to go lower. The hourly chart is, again, the higher time frame. So I'm looking for it to hold in this upper portion. Don't want to see it trade down to here. I just want to see everything be held in the upper portion when I'm bullish. If I'm bearish, obviously we would flip it. So let's go down to the 5-minute chart. Well, what do we have on the 5-minute chart? Another fair value gap, but look at the bodies. Where are they being held? In the upper portion of a 1-hour inverse fair value gap. They're being held up here. They're not allowed to trade lower. Everything here is showing me and is stacking in an upper portion of a higher time frame array. We have expansion away. We come back in. This is a breaker. Where do we stop? Where are we being supported? Upper portion. We come down to this order block. Where are we being supported? Upper portion. So that's letting me know specifically that we're looking for bullish price action because price is being held. Everything is stacking in this portion. So we go down to the 1-minute chart, which is where I do my entry on. What do we see here? 15-minute fair value gap, inverse fair value gap on the hourly chart. Where does this breaker form on the 1-minute chart? It forms in the upper portion of a 15-minute fair value gap. Also, it's on the upper portion of a 1-hour inverse fair value gap. So again, if I'm looking for bullish price action, I want to see the raise and support levels that I'm looking for stacking in this upper portion. Sometimes I try to figure out like how I ended up getting here to this point. Yes, it was through back testing, but it was something that ICT had said where he knows exactly where his P arrays are going to form. And that always stuck with me. I believe what he meant was knowing where they're going to form and also knowing the time, which is macro times. If I know that I'm looking for bullish price action and I expect this to be a support level, I know that I'm looking for this upper portion for my trade to form there. That's all I'm looking for. I want to see higher time frame levels show lower time frame support in the upper portion of any PD array. Doesn't matter if it's an order block because this is an order block right here. See that? This is an opening price of an order block and look how it hits there with a fair value gap. That's when I started to notice the good trades when things were stacking together, where they were cohesive. It allowed me to understand where high probability trades are going to set up and what I'm exactly waiting for. This is the exact trade that I took. If you want to watch a more in-depth explanation of how I even got to that point. Again, what are we seeing here? A 15-minute fair value gap. Cool. So what do we want to see? We don't want to see a trade up into here. We want to see everything stay below here. When I go to a 5-minute chart, I want to see this lower portion show evidence that we have multiple arrays showing the unwillingness to trade higher into this higher time frame fair value gap. We go down to the 5-minute chart. We have a breakaway gap. Notice how everything is being held in the lower portion and I'm seeing them stack, right? So we have this order block hits here, expands away. Then this one comes up, hits this. Notice how this is also an inverse fair value gap and this is in the lower portion and stays in the lower portion. So what should I expect here? It's going to stay in the lower portion. Price is showing me that it's weak. Everything is stacking. Yes, we trade up a little bit higher, but notice where the bodies, they cannot close up anywhere near this and it's showing weakness. The 1-minute chart, I should be looking for things to stack in the lower portion. As we see here, it's stacking in the lower portion. It's letting us know that price has zero willingness to trade higher. That lets me know we are looking for lower prices. We trade up into a 5-minute propulsion block, expand away, have a fair value gap, a breaker, and then trade lower. We come back up again, a 1-minute fair value gap, the lower portion of a breaker block. Again, that's another key signature that you'd be looking for. And then we trade lower. So notice how like where the good trades are forming in the lower portion. This is the exact trade setup that I took for this one. Took a little bit of drawdown, but ultimately understood what we were looking for based off of how the 15-minute, the 5-minute, and 1-minute were all cohesive and stacking in the lower portion. That's what I look for in all my trades. This is the last example, 15-minute fair value gap here. Notice where, yes, the wick comes down here, but look where the body's staying above. When I see this and it comes down into here, I expect bullish price action. It's not that I know 100% for certain that this is what's going to happen, but this is what I'm expecting when I go into a trade and I'm looking for bullish price action. I don't want to even see a trade lower. So when I look at this and I see a 15-minute fair value gap, I'm looking for the 5-minute chart to show me something that would support the idea that price could go higher. So we go down to the 5-minute chart. What do I see here? An order block. This whole range is the 5-minute order block and where the upper portion of a 15-minute fair value gap. Again, that's what I would want to see. It can trade down here. I would expect it not to, but I don't just take a trade into a fair value gap on a 15-minute chart. I like to see this stacking. If we come down and respond off of here, we're most likely going to go higher. Now down to the 1-minute chart. This is the 15-minute fair value gap, the 5-minute order block. We come down. We have actually failed to hit that, which lets me know that it's more bullish. But then what? We scream away. Breaker, fair value gap. Where is the fair value gap? Upper portion. We also fail to hit this 5-minute order block. So we end up trading higher. Now this is a high resistance liquidity run, but it doesn't matter. The framework stays the same. I'm looking for PD arrays on the higher time frame to have lower time frame PD arrays that support the direction I'm looking for. That's all I'm doing in every single one of my trades. The entry model looks the same. Here's the actual trade trade, this is what it looked like the day I took it. So this is what I call the stacking concept, which helps me frame high probability setups and understand what I'm looking for and where to look for my setup to form. I think that's very key when you can understand where they're going to form. And when you see them, you have the confidence to take the trade. I hope this video has served you. I hope it's helped you gain an understanding of how to read the market in a different way. Thanks for tuning in to The Informed Minority. If you enjoyed today's breakdown, don't forget to like, comment, and subscribe. If you'd like to follow along my trading journey, your support means the world. I'm looking forward to seeing you in the next video. Peace.